Are you planning to sell your residential property? Well, you can save on your taxes if you follow some simple steps. So let's dive in. First, ensure that you hold your residential property for at least 24 months because it transforms into a long-term capital asset. And now you can pay lower tax rate of 12.5%. However, if you're selling it sooner, that means if you're selling it before 24 months, then you have to pay tax at your slab rate. That means it could be 30% also. So once your property becomes long-term capital assets, you have a choice for taxes. If your property is acquired before 23rd July 2024, now that is 12.5% without indexation or 20% with indexation. So now let's talk about very important aspect, that is exemption under section 54. Under this section, you can claim relief on long-term capital gain tax when you invest in new residential property. Do you know the maximum exemption limit under this section is 10 crore? And the exemption is lowest of these two, that is capital gain from the sale of residential property or the amount which you are investing in new residential property. So let's understand this with an example. Suppose you sell your house and earn a capital gain of rupees 35 lakh and buy a new one for rupees 20 lakh. Now you can claim an exemption of 20 lakh and the taxable amount would be only 15 lakh. So now if you want to claim exemption under this section 54, you must meet these criteria. That is, number one is this exemption is available to only individual and HUF. So companies are excluded. And number two is that it should be a long-term capital assets. That means holding period must be more than 24 months. And number third is it should be a residential house property. And the fourth is the new residential property which you are buying, it should be located in India. And the fifth, very important criteria is that the new house property which you are buying must be purchased 1 year before or 2 years after the sale. And for construction, you have given 3 years. Now, very important condition which you must follow if you are claiming exemption under this section 54. That is, you must hold that new residential property at least for 3 years. So if you are selling your new residential property before 3 years, then the exemption will be reversed and you have to pay taxes on your gains. Now, what if you can't purchase new residential house property before the due date of filing your ITR and you still want to claim that exemption under section 54 and you still want to save taxes? Then in that case, you have to deposit that unutilized capital gain in capital gain deposit scheme. In this way, you can purchase that residential house property later and the capital gain on old residential property will not be taxable either. So if you are opting for capital gain deposit scheme, you must follow few conditions. Number one is the amount should be deposited with authorized bank branches. And number two is amount should be deposited before the due date of filing your ITR. And the third one, very important, is that amount should be utilized within the specified period. That means 2 years for purchase and 3 years for construction. So in case you are unable to utilize the amount within the specified time, then in that case, the capital gain which was exempted earlier will now become taxable. So keep these points in your mind while selling your residential house property and maximize your tax benefits. Subscribe this channel for more such information on taxation and financial planning and post your feedback in the comment box down below.